Well, welcome to Stream's Deep Dive Podcast. Today, we've got four of us from Stream's IDS division, Industrial Development Services. I'm going to let everybody just introduce yourselves. We'll start on the West Coast with Scott Sowanick.
Hello, everybody. Scott Sowanick, head of the Western region, based in Southern California, where I oversee our industrial development and investment efforts in SoCal as well as in Phoenix. Bates?
Yeah, hello. I'm Bates Arnot. I am based here locally in our headquarters in Dallas. I oversee industrial development for our central region, which includes the greater DFW area and along with our Denver and Colorado markets.
Hi, everyone. Dale Todd here, leader of the Northeast and Midwest region for Stream IDS. That effectively includes Chicago, Nashville, the DC metro area down into Southern Virginia, and as far north as Philadelphia.
Now, I'm Justin Robinson. I oversee our Southeast region, sitting in our Houston office. So that's Texas, excluding the Dallas-Fort Worth Metroplex, going east, Georgia, North Carolina, South Carolina, and Florida. So I know all of us have gotten to where we're sitting today from a lot of different paths. So maybe we take a step back and just talk about the evolution of IDS and how we all got to be sitting here today. Scott, you want to kick us off with your thoughts?
Yeah, sure. So I think it's important to note Stream opportunistically, since its founding in 1996, has been a true local operator. And then, over time, obviously evolved into a fully integrated company with its service business and the development capability. Specific to our business unit, what we call internally IDS, Industrial Development Services, really was born out of our service business, in the sense that we had a lot of clients on the service business who were looking to grow their exposure into the development business. And so Chris Jackson, our now CEO, that communication came from the heads of our service business, and that became the centralized desire to have what was IDS. And that's really the kind of the conceptual start. Practically, and going back to time period, Cannon Green, who, I like to say Cannon was my first boss and then became a partner, and now he's somewhere between my big brother and my, best friend type of thing. But Cannon, back in 2014, 15, really started to focus related to industrial development here in DFW. And actually, I was a summer intern with Stream in 2014 and was helping Cannon get capital for one of his first two projects here. And then it really came back to in 2018, Chris and Cannon approached me about the idea, along with Albert Gerald, the idea of formalizing that and taking what we've done in DFW on the development front and trying to grow that out to Southern California. All under the umbrella of purely being focused in our industrial development services business. And so back at the end of 2018 is when we tried to take what the business that Cannon and Albert and Chris had successfully built in Dallas and see if we could grow that out to SoCal. And then that obviously led to the emergence of the Western region. And then, Justin, I'll kick it back over to you, and then I think it'll flow really nicely into Bates and Dale, who both have great backgrounds and kind of came on post fact. But kick it over to you in terms of what you guys have been doing in Houston, and then obviously the emergence of the Southeast.
Yeah. No, if you rewind the tape, I was one of the original 5 folks that went down to Houston from Dallas to kick our Stream Houston office off, and we really came up through the service business. My background was primarily industrial leasing. And so that was our mandate day one. Me and Kyle Valentine were focused on building our industrial business in Houston. And just as a natural extension of our service business, our deep kind of in the trenches knowledge of supply and demand, we started doing development in Houston in 2008, going into 2009, with a fee development opportunity with Principal Financial Group down near Port Houston. And then from there, every year or so, we would do about a deal a year on average, while still trying to grow and maintain our service business. And we were doing that mainly through partnering with our clients and trying to create that virtuous cycle of feed our customers deals, they feed us with service business. And so we did that really through 2018, going into 2019, I made the decision to pivot at that point to focus exclusively on industrial development. And that was where the stories merged basically with what Scott was saying, with what we were doing in Houston. And so then we took another step back and said, hey, if we're going to all be doing this, it doesn't really make sense to have duplicative efforts of different people rowing different directions. We really need to have the same look and feel. From a risk mitigation standpoint, it makes sense to merge our businesses together and create IDS. And so that's what we did. Going back 3 years, we merged those businesses. Instead of having a bunch of different looks and feels and independent development companies within the company, we centralized and we created our IDS vertical. So that's what we're all sitting in today. IDS is our centralized development vertical for industrial.
And then Bates and Dale, like timing wise, I think it's important for you guys to kind of give your 2 cents on where you were in the case of Bates, at Stream, left Stream, came back to Stream, and then Dale with you being a client and then coming over to the dark side. But like timing wise, when that all happened, because it all came together around the same time.
Yeah, Bates, you go first, and I'll jump in after.
Yeah, sure. I mean, like Scott said, I mean, I think kind of on the heels of, formalizing, the IDS initiative within Stream, I'd started to talk with Cannon and Chris, or, they had reached out about the plans, going forward with the formalized industrial group focused on development, with the vertical integration of all of Stream's, service lines and platforms. And so around that time, it was an easy, decision for me, simply because I had started at Stream out of college as a broker. I knew the fabric of the company. I knew the culture of the company. I knew the, partners and the founders of the company. And, I had left to go learn the development business, and had the good fortune of working with Hillwood for several years, and learned, everything I know about the business today there. But having the opportunity to come back and team up with a group of people that I was already familiar with in a space and an asset class that I'd been learning and studying from one of the most, reputable developers in the country, I just knew that it was a great opportunity to come over and kind of build this team within Stream and this platform within Stream. And, looking back over the past 5 years, how much we've grown. Scott's moved, permanently relocated to the West Coast, and Dale's come on board, and so much coverage on the East Coast, and, the Florida markets with J-Rob. And, it's pretty fun to look back over the past 5 years and look at how much we've evolved, both within the company, but also within the markets we operate in. So that's kind of where we are today.
Yeah, and for me, what's super cool is just how complete we are now as a national platform. When I joined, and I'm kind of the youngest, the new kid on the block, so to speak, in terms of regions, and also the only one without a brokerage background at all. I came in to Stream. So some say I've been at Stream officially 5 years, but some would say I've been at Stream for 8 years or something like that. Because during my time at JP Morgan, which was my prior gig, I was one of the biggest clients, one of Stream's biggest clients on the office side. Oddly enough, I worked with Scott when he was an office leasing broker, and in building that relationship with Stream, I got to see a lot that I liked about the company. I got to know the leadership really well. I worked with Cannon and Chris and Blake Kendrick and a lot of the leaders of the company, and just loved the culture and everything that I knew about the trajectory of Stream, and where the idea came together for me to join IDS. Was really, Scott had done his thing, started doing his thing in Southern California. Bates was here in Dallas, and Justin was in Houston. And the last piece of the puzzle was kind of the Chicago Northeast part of the world, which I had done a lot during my career and had a lot of relationships and a lot of market knowledge. And, Stream could use that market knowledge to grow the industrial development platform, and it just made a lot of sense. I'd begin to think that I wanted to do industrial development next from being a capital guy, and I love Stream, and presumably Stream loved me, and it was kind of a match made in heaven. So so far it's worked out about as good as we could expect it to work out. Like I love the Stream culture, and I think one of the coolest things about our platform is all the different ways we can get into deals, all the different avenues we have to source deals, and all the different avenues we have to execute deals, exit deals, which is, really great. And, we're about to dig into that some more, but that was the thing that was most attractive to me. I think one thing to point out is that even though we sit in Dallas, Houston, or Orange County as regional leaders, like we're really local experts in all the markets we operate in, right? So from LA to Miami to Richmond and everywhere in between that we operate, we have boots on the ground from an construction and execution and entitlement standpoint, and also from a leasing and market knowledge standpoint, which really enables us to function as local operators in each of our markets. I think that's something important to note. We're not just parachuting into different places. The four of us aren't just parachuting into different places and trying to figure it out.
Yeah, that's a great point. I mean, in Houston specifically, we lease and or manage about 50 million square feet of industrial. And so through our internal brokerage relationships, we got the market covered cold. I come from a leasing background. We've got a very intimate knowledge of that market. In Atlanta, which we also cover, is another good example where we have a really deep bench of brokers there that we're relying on for market intel. We're spending a ton of time in the market. We're there, once a month, if not, more frequently as needed and as the market dictates. But I think that's a great point, Dale.
The way that we're structured, and I think a massive advantage of our business, and developers, everybody operates differently. There's no right or wrong, but between the four of us and all of our regions, there's no like prototypical project that we are all doing. And frankly, there's also no like annual mandate of number of deals that we have to do, amount of money we need to go try to deploy, square footage that we need to try to the leadership here, and it harkens back to the company culture, and I think it makes us be really great operators, is that our job is to go source and execute fundamentally solid industrial development opportunities in each of our respective markets. And if that, it sounds super simple, but if that is the hallmark that kind of bonds everything together, that what we do, it gives us the flexibility to truly be local and build our businesses around that. We're not imposing our will at like the top level and then disseminating it down to our markets. So
I talk about that all the time in my markets, just how flexible we are from a deal structure standpoint and from a product type. We can meet the market for whatever product type, and we could make our deal structure work for whatever construct needs to be between the parties, right? So if a land seller doesn't want to sell, they want to stay in the deal, we could do that, or whatever. So yeah, I think that's a great point, Scott.
Well, let's expand on that. Let's talk about how we capitalize our deals when we do find those opportunities that Dale and Scott just referenced. How that, the specifics on how that happens, and I'm happy to kick us off there. But the way I look at it, and feel free to chime in, is we talk in terms of trying to fill certain buckets. So we have everything from internal capital. So we have an investment management team that is out raising discretionary funds for office and industrial. And so obviously we can deploy that capital through industrial development opportunities. That's one way. Through those funds, we also have the ability to joint venture with our strategic service customers. And so I mentioned earlier that we really try to create that virtuous cycle between our great service clients and our development business, and we feed them deals, they feed us service business, and it keeps that going. We also have the ability to do fee development, which we're doing with several folks across the country currently. And then I think the fourth bucket is a little squishy, but it's creative deals. So that can be land flips, that can be fee entitlements, which kind of goes under the fee development bucket. But at all times, I think it's really all of our jobs to keep all of those buckets full in each of our respective regions. And so at a basic level, that's the way that I think about it when we're going into a new year, like we're going into 2026 right now. And I'm looking at our regional business plan. I'm thinking, how are we going to keep all of those buckets full? And if they're empty, how are we gonna get something new into that pipeline? And Scott did a good job of mentioning that we don't have any real mandates or any quotas that we've got to do to fill each one of those, but just trying to be good business people within our respective regions. If you look at the most well-rounded regions, you do have opportunities going in all of those different facets.
Yeah. So I spot on, Justin, and I would add too. There are a lot of things I love about what we do for a living, and one of them is our job. We're hunters, right? We're the operators. So what doesn't change is our understanding of our individual markets from an industrial supply and demand standpoint. What does change is the deal profile. And what's fun about the capitalization is that our job is to go out and find deals. But at the end of the day, the capitalization of a deal is going to be determined by the type of deal. Our job as an operator is to know if it's a fundamentally good deal, but that doesn't mean it has to be XYZ return, because there's a wide diversity of capital out there that has raised money and has fiduciary responsibilities on behalf of their investors to do certain types of deals. And that's what's great about what we do and our platform, because you had mentioned our investment management business. I mean, they have raised capital on behalf of investors for a specific type of return profile. Then we have a phenomenal list of service clients who may have different types of return profiles. And then we have other clients, whether they're users or investors, who they want to just have a service provider be a fee developer for them. And so what's great about our job is we just go out and find deals, and then we can marry it up with the type of capital that's going to be the best fit.
Yeah, I find that, in this market, when there's a lot of what I'll call price discovery still, right? There's still, in a lot of cases, kind of a bid-ask gap between what sellers expect and what we can make work from an underwriting standpoint. And for me, that's where that flexibility really sings, because, sometimes if you can't get to a particular gross price, then maybe a land contribution works for the seller and we can get to a meeting of the minds there. And that's one area where I've been able to get some traction in my markets. Bates did the first one, at least that I know of, on our platform over in Fort Worth, but where the seller can contribute their land and stay in the deal and get, some of the back end upside. Sometimes they'll accept a lower price on the front end, and that helps cover that bid-ask gap. The other area where I think we're going to really, this group is really going to excel just because of our local entitlement expertise is, there's the emergence of a lot of capital groups that want to do their own vertical development. And, where we can slot in, the entitlement's the hard part for the most part. And that's our expertise. We're good at that. And where we can slot in and create sites that we, Justin, you mentioned land flips, where we could just flip to them for a profit. I think that's going to be a big part of our business going forward as well.
I would just say back on the, capitalizing deals. I think it's already been said here, but, the beauty of it is we have options at Stream through the relationships that we've built, since 1996 when the company started, and obviously with our internal investment management business. But, we are stewards of this business and stewards of the brand of IDS, and every deal that we find compelling is its own conversation, and that conversation involves sometimes people within Stream outside of our group, but it's to ensure that we are always doing things the right way. And so the questions come up a lot of, why wouldn't Stream do this internally, or XYZ, and the reality is those conversations have been vetted, that we know that they are good opportunities that we have control of, and we steer them accordingly within the unique circumstances of that deal, where it sits within, whatever market it's in, it's going to have its reasoning for the route that we choose to go with it. And that's just what I'll say is it's great that we have options, and every deal is its own conversation on how we end up capitalizing it.
Scott, I know California is a unique animal in its own beast. What does fee development look like for you guys out there? I know that's an increasingly important part of y'all's business and something that will grow over time.
Yeah.
Any more thoughts there?
Yeah. So, and it's good you segued to fee development, because when Bates made that comment, I was thinking about it. If I could run in my academic portfolio perfectly, it's a third joint venture development, it's a third joint venture value add opportunistic existing building repositionings, and it's a third fee development. It never works out that way, but that's how I try to manage our Western region portfolio. And this 100%, I've been at Stream going on 10 years now. The service business, Stream, we like to say it's a service business at its core. Industrial development services, IDS, the S is services. The fee development business, regardless of the market, for us, I mean, what I preach in the West, and I know you guys do too, it doesn't matter what's going on in the cycle. We are always in the business of doing fee development on behalf of our clients. And again, that can come in the form of capital partners or users in the form of tenants. And so I would say right now we have, out of our active portfolio in the West, actually pretty close to that, a third is fee developments. Those are on behalf of institutional capital partners who, for one reason or another, they either choose not to joint venture with operating partners, or in some cases, they've actually brought us in because they sourced the deal on their own, but they don't have the industrial entitlement and development operating level expertise, and we do. And so, again, fee development for us is always a focus. I would say a big differentiating factor for us, and I say this externally a lot, and I mean it very sincerely, is I don't care how big we get, how many people we have, how good the market is. We do not turn our nose up at a fee development opportunity ever. It's a really important part of our core business. When you think about smaller built-to-suits on behalf of users, for example, you got to see the forest for the trees. And it may be a tenant built-to-suit for a freestanding 30,000-foot building. That tenant may end up growing, and they may need 50 over the next 10 years. And so, and that's the same thing with capital relationships, is whether it's a joint venture, we're investing our money or not investing our money. I remind my team, our process never changes, our focus never changes. And so that's why we're always, frankly, we're unbiased and agnostic when it's our fee development business, because it's what we do. And so the door's always open for that.
I think that's a good point. And, it's a question I get a lot too when I pitch a fee development. Are we going to get the B team? And the answer is always exactly what you said, Scott. Absolutely not. Level of service is the same. Focus of the leadership team is going to be the same, because at the end of the day, our brand is the S in IDS, right? Is delivering good service, whether it's to a joint venture partner, fee development partner, built-to-suit tenant, or whatever. We're not going to say, well, we're not in a promote here or whatever. We give it a lower level of attention. That's never going to happen. We're always going to bring the A team.
Well said. Pivoting a little bit, active projects. I know we've all got a lot of exciting stuff going on in our respective regions. Is there anything that you guys want to highlight, get out there for the audience?
I'll jump on that one. We have one building coming out of the ground in Nashville. So there's going to be a 350,000 square foot cross-dock building and a 720,000 square foot cross-dock building that's, available for lease, obviously, or sale. And then we're going to be looking for capital for an awesome site in Philadelphia. So those two are very exciting right now.
Yeah, so we have two active projects, four buildings under construction in North Fort Worth, the Alliance submarket, as we speak. And those two groundbreakings were our first two groundbreakings in DFW since late 2023. And so, DFW is, finally, I think, recovering from the gluttonous amount of supply that was delivered post COVID. A lot of that products, finally getting leased up. And so we're excited to get both of these kicked off. It's in one of the top performing submarkets in the country. And so, we think that these are two successful projects. We can cover a large range of tenants from, 30,000 feet up to 600,000 feet across those buildings. And we've also recently purchased 174 acres in Fort Worth that we are in the permitting phase of, that we'll break ground on next year. And so, as it relates to the greater Fort Worth market, we're highly convicted in everything about the fundamentals on that side of the Metroplex, and the absorption, the growth of the city. It's all things point to Fort Worth being a great place to be developing, I think, over the next 5 to 7 years, and we're well positioned to do that.
In Houston, yeah, we've got two projects going in Houston, one down south. We've got two buildings, about 400,000 square feet total down there. That'll deliver early first quarter next year. And then we just broke ground on another project just south of the Woodlands. So it'll be some shallow bay. It's 200,000 feet, two buildings. We're starting to sell some stuff, some of our legacy projects. We sold our first three buildings at Empire West about a month ago. We've got two more there on the market. Earlier this year, we were bought out by our partner on a 1 million square foot deal down in Port Houston. And then I think looking elsewhere in the region, we're really excited about what the fundamentals are telling us in Atlanta. That market is starting to recover, and we're at the bottom of an improving markets. We're dedicating a lot of time, a lot of resources there to really make sure we maximize this next development cycle. And then Clay Golden and Chad Baldwin are on our IDS team. They're in Austin, but they're covering our Florida markets, and we're uncovering some really interesting things, mainly at the moment in Orlando and Tampa. So those are markets that we really like, and I think we'll have some sites there to talk about here in the near future. But a lot of good stuff going on in the Southeast.
Cool. Yeah, and I'll wrap up real quick. So in Southern California, we are under construction on probably one of the largest projects that's actively being built right now across the entire market, which is called 101 Logistics Center. That's up in the LA North market in Ventura County. Location-wise, one of the fun things about my job, I have no biased opinion about geography. I have very biased opinions about fundamentals. And so, we believe the West Ventura County industrial market is institutionally has been overlooked because it's not main infill LA, but you dig into the fundamentals of legit supply and demand, and it's arguably one of the most favorable throughout the entire greater Los Angeles basin. So that's 4 buildings, 750,000 feet, actively under construction right now, slated to deliver likely in summer Q3 of next year, 2026. And then lastly, and going back to my comment earlier about, we have our leadership gives us the flexibility to be expert operators. My team has spent an enormous amount of time over the past 12 months trying to expand and grow our existing building repositioning footprint in infill Southern California, specifically in LA. So we bought our first value add multi-tenant deal about 2 years ago. We're executing that business plan as we speak. We're under contract on another existing manufacturing facility that is in LA, and we're hoping to be under contract on a couple more right now. We believe that Southern California has been in a firm correction since the Fed started hiking rates and has fallen from grace, and it's been tough sledding. We're not trying to call the bottom by any means. We are, again, going back to just being focused on our market. We think that there are some pretty incredible value propositions on the existing repositioning side for irreplaceable, incredible real estate that we believe we can buy these buildings at incredibly attractive bases. We know exactly what it costs to build these buildings new because we're developers at heart, and we're trying to make a couple methodical investments, under that thesis.